And joining us now to share his commentary on the day's market performance is Louis Storm from Vega Capital. Louis, thanks so much for your time this afternoon. Let's perhaps start off with what you've made of trade this week, right? Earnings season in focus. We also had some tensions brewing between the US and China, that US government shutdown still in play as well. How have you been viewing markets so far and how they've reacted to some of the news we've seen coming through?
Yeah, well, firstly, volatility has been quite low over the past couple of months, and we actually thought it's a bit too low. This past week, we saw the VIX index shoot up from around 14 to 22, 24. And I think this better reflects the risk in the market at the moment. We are seeing a flare up in the fears around the tariff war between China and the US. I think that's not sorted out yet. And I think that's also why you're seeing the gold price strengthening and just continuing its extremely good pace. The market is quite uncertain about the future, and I think the next couple of weeks we will see markets stay relatively volatile. I mean, with earnings season starting now, as well as the US shutdown, there's a lot of factors to take into account. But I think if you look at the bigger picture, economies are still very strong. The earnings that we've seen so far is very strong. It's looking good. And I think there's a lot of money that flowed from the money market and treasury funds to gold, as well as reserve banks buying gold. So, minerals and commodities are strong, and the companies seem to be strong. I just think there should be some caution when buying these companies at the moment.
And just talking about caution, there's been so much worries about what's been playing out in the tech sector, particularly the companies that are, of course, banking on that AI boom. There's been talk around, a bubble brewing. Now we are seeing some of those earnings coming through. TSMC posting record numbers. Yesterday we saw ASML also out with upbeat numbers, but warning of sales decline in China next year. Just your reading on what's been playing out in that market and whether those bubble concerns are warranted, because here we are seeing the numbers coming through, record numbers after record numbers, but there are still concerns around valuations.
No doubt there's some tech companies that there's a bit of a bubble forming. But I mean, you look at the valuations of these companies. Most of these companies are trading at relatively low valuations. They're growing earnings by 30% and trading at PE multiples of around 25, 28 or 30. So that's not too expensive. That's at a PEG ratio of around 1. I mean, that's actually quite, relatively fairly priced, I think. There's obviously some shares that are trading at PE multiples of 300 and 400. That's something on its own, but it's smaller companies. The larger tech players are trading at relatively fair valuations. We don't see a bubble forming due to the fact that you're seeing the earnings growth coming through as well.
All right, let's shift focus to commodities. As you mentioned, it's really gold, really glittering with everyone flying to safety. DRD out with an operating update. Earnings up 2%, production up 2%. Earnings up 1%, production up 2% on the back of that high gold price. But we are also seeing operating costs also increasing. How are you viewing that company just on the back of the macroeconomic environment where we have prices working in their benefit? I mean, the company is still debt-free at the moment.
Yeah, well, the share price of miners basically gets driven by the commodity price. It's very rare to find a strong miner with a weak commodity price. So that's basically the 90% of the story. So it will be very difficult for the company to perform poorly with the strong gold price at the moment. Also, if you look at the share price performance, it's very much linked to the other other miners as well. Pan African performed very well, and we prefer Pan African in this sector, but also DRD Gold doing very well and performing good.
Okay, let's move over to the food producers. Now, that sector, we heard some big news coming out of there with Premier making a bid for RFG. Just your initial reactions to that. What have you made of it? We could possibly see RFG delist if this deal goes through. I mean, there's been a lot of murmurs around acquisitions and M&A activity within the food producer space. I think Lipstar was also, there was rumors around that group also being acquired. What have you just been making about what's been playing out there?
I think this deal is great for both companies. There's no overlap between the companies, and it increases the scale of the companies. And obviously, if you increase the scale, most likely it will decrease your relative cost. So, I think both sets of shareholders will be quite happy with this deal, and I think should go forward. Should proceed with the deal.
And I see Premier up 6%. RFG, the last time I checked, was really soaring. It was up in the double digits the last time I checked. Before we move over to the stock picks clips, Louis, let's talk about Labat for a bit, right? Operates in the cannabis industry. Not sure if this is one you follow closely, but last time I checked, that share price up over 60%. Of course, recently we've heard of the group moving its listing to the main bourse, and we are seeing that uptick, of course, on the back of the trading update where it expects to return to profitability.
Yeah, this is not really something that we follow closely, to be honest, but it's a company with a small market cap. So a small amount of buyers can drive the share price a lot. So they did report good earnings. There's a upbeat earnings presentation. So I think there is a lot of positivity around the company, and earnings and the share price did extremely well. But as you can see over the last couple of years, the share price is very, very volatile, and it's definitely a share to be very cautious of.
One of those small cap players. We just had the graph up. It's actually up 80% at this point. Wow. Hey. All right. Incredible. Let's pause on the conversation, Louis. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
They're slightly pivoting the business. Obviously, we know the Memorial Box has increased, and it's only about 8% of the group sales at the moment, but that will continue to increase, and that's a nice annuity income coming in for them, or definitely a diversify, if not annuity income, sorry. But good cash liquidity on the balance sheet, about 150 million rand sitting there. You know, it's a better cushion than we had before. This is a company that had to go through a rights issue about 5 years ago, just before COVID, I think. And, the company's earnings, I think, is a bit understated at the moment. I think, a lot of the projects that they're doing at the moment, they've expensed. It's on the balance sheet, and they will only start selling them in the next quarter or two, or the next year at least, and then that will translate into earnings. Interest rates are dropping. It makes the, obviously, property more affordable going forward in SA.
It was extremely cheap in the past 2 years. And, if you've been following LVMH for a bit of time, you'll know that when leather goods doesn't do well, it trades like a commodity. So when leather goods, sort of loses sales, doesn't do well, as soon as you see that leather goods market reverses, you see LVMH starting to pick up. And this was the first set of numbers that's showing that the leather goods is not really growing. It's just organic growth for the overall group is 1%, so it's turning positive. But the most important thing is that the deceleration in leather goods has sort of flattened. So you're seeing Dior and Louis Vuitton sort of, flat in terms of, losing market share, or, not seeing as much shoppers, coming to the market.
So Bright going with LVMH and Drickers picking Calgro M3. Your thoughts around those counters, Louis?
Calgro is definitely an impressive company and a good investment. It's it's a value share as well. It's kind of cheap at the moment. With the share price, it's around 50% less than the net asset value of the company. So we're also quite constructive on Calgro, but it is also relatively small, and there is some risk associated with the business. They do a lot of deals with the municipalities, and they get a lot of refunds from the municipalities for infrastructure completed. So I think if you look at the debt levels of these municipalities, at the moment it's still going fine, but there is definitely some risk associated with the share, but we still feel that there's some value there. And then with Louis Vuitton, the other share, we also like Louis Vuitton. Share price has also been quite volatile in that 2023 to 2025 period. Share prices was down almost 50%, but has now recovered 30% in the last 3 months. So we do prefer Hermes in this sector, but Louis Vuitton has got a very good competitive advantage as well. We just feel Hermes has got a stronger offering at the moment.
All right, let's get into your stock pick. Where are you seeing value at the moment?
Yeah, so my stock pick is Taiwan Semiconductor. Basically, it's the less sexy semiconductor shares. NVIDIA and AMD is stealing the show, so they are the designers of these chips. But basically, TSMC is the only manufacturer of the chips. So it doesn't really matter who wins the design battle. TSMC it's the only manufacturer that's got the ability to manufacture these high-end premium chips. So they've got a monopoly on the market, and for others to get into this market will take quite a while. To build a new plant takes 3 to 5 years just for them to put up a new plant that's operational. If someone else wants to come into the market, it's going to take them much longer. So we're still seeing a lot of value there. It's trading we feel at very good valuation levels, growing earnings at 30% we saw now earlier today, and the PE ratio is around the mid-20s level. So we feel quite confident.
All right, let's leave it there. Louis, thanks so much for your time and sharing your insights with us this afternoon. That was Louis Storm from Vega Capital.